Well, hello everybody, and finally I'm back with another market update. Um, More of an explanation probably than anything else as to why I've been away so long from the videos, and it'll all make sense in a little bit here. Anyways, a quick update on the market. So looking at the screen here, I just wanted to explain sort of what's happening. The market right now, interest rates are still continuing to go up. It is having a big impact on our buyer pool, but it's also having an impact on the sellers. So a lot of sellers are not willing to come down as prices are coming down, and they're taking product off the market, which is changing dynamically the supply versus the demand we're having versus the interest rate versus the dollar value that people can spend. So these are very constrictive in what's happening. And as a result, what we're seeing is a much lower volume of sales and listings than we've ever seen before. So this is keeping an upward pressure on prices while the interest rates are causing prices to have downward pressure, which keeps everything fairly static and doesn't allow much to happen. So every once in a while we're going to get a sale that seems quite high, and then we're going to get a sale that seems extremely low. So it's a seller that absolutely has to sell that gets the low price sale, and then when there's a seller that's hanging on but there's a buyer who's actually anxious to get that particular property, there seems to be a higher price property sell. But there's not enough properties selling to warrant the ability to dictate this as a trend. So on that's kind of what's happening in our market locally. Now, on a bigger scale in Canada, the Bank of Canada and the Fed are both sort of toying with the idea of increasing interest rates. As the people that I listen to, they're all saying that yes, the Fed and the BOC are definitely trying to create a recession. Why would they want to create a recession? Well, they need a reset because wages are going up too quickly. They need a reset because people can't afford the houses that they're in. They need a reset because businesses are no longer being profitable, which is causing our gross domestic product to go down. So on a bigger scale, what's happening is the government needs to orchestrate a recession. And it doesn't happen very often, but this time the government needs to have that happen. Now, the indicators that I follow when I'm doing my stock market investing or equity investing basically is telling us that we are going to enter into a recession within the next couple of months. Now, recession has already been indicated. There's been 2 quarters of negative GDP growth, which would indicate that technically we are in a recession according to some people. However, the employment hasn't changed. In fact, employment has been quite strong. So that's what's enabled people not to technically call it a recession. If you ever follow recessions, basically what happens is once the GDP is going down and employment starts to suffer, then it's already too late. And by the time they call a recession, we're already 3 or 4 months into the recession. So this will have an effect on the housing market, but we actually don't think it's going to be as big an impact on the housing market as most people might think. We still think there's the potential that we could go down maybe 8 to 10% in value, but you're probably not going to see much more than that. Now, if you take that in conjunction with the fact that we will see interest rates going up, then the cost to buy is going to be roughly the same. So the market is going to continue to stagnate for a while. Some of the things I wanted to go over with you from a sort of technical perspective, and then go into why we haven't posted anything for a while. And that is, if you look at the new listings or the total inventory where we are right now, you can see it's 192. As of current today's date, it's 188. So we're still falling in total inventory, but that's expected to be seen. But if you can see from 2018 to current, the trend is down in inventory. So one of the aspects that people don't consider when they're looking at inventory levels, but we need to consider, is that we're in an area where there's a growing population. So the number of listings or the inventory doesn't really truly paint a picture of what's happening, because you need to take population growth into account. So that's one of the things that I'll be talking about later as to what I'm intending on doing and what we're going to be creating that'll benefit everybody. But at this point, I just want you to understand that element of things. Now, we talked earlier about the housing price index. When it started to fall over, that we would definitely start to see a big drawdown. So I did the 12-month rolling average, and remember I mentioned that the only other time that it's come down, housing prices came down as well. And the problem is that it's 3 months backward looking. So we're starting to get that fall over here, which means 3-4 months ago prices started to fall, which is par for the course, which actually happened. Now, as we look forward, we want to be able to identify when that happens in advance. That is the reason that things have been so delayed. So what I work on, I'm going to show you guys something here, but I need the other screen to show it to you. So basically in my stock investing world, these are, I've blacked out all the stuff up here because it's my own proprietary investing stuff that I do. And basically I track numbers every day on the stock market. And when I fill the numbers in, here's the row for today's date, which is the 11/22. So all these dates I filled in data on a daily basis. And then when you take that data, I have computations that are then done, which draw out what I call a heat map, which looks at the investing world and what's happening on a going forward basis. So right now, as you can see, from an investment perspective, if we're looking at stock market, you'd say that the short term does have some green shoots there, and the medium term had started to turn green about 2-3 weeks ago, and long term is starting to show signs of some green. So what that indicates to me when I'm investing is that, as you can see here, previously we were so red. There was no reason to be in the market. There was a little snippet here through 2022 where we had the option to make some profits, but generally speaking, since early on in the year, we've been predominantly red, which short term, medium term, and long term would show you the environment is poor here in the long term. In the medium term, it's still not good, but we did have little windows where we had the opportunity to invest. So what I'm proposing is that I'm creating a heat map for the real estate market in Squamish. And that will allow us, so where we get the data from, so I can take this out of here. So that's kind of what I do with real estate, or with, sorry, my investing. But with regard to real estate, what we want to do is we want to look at things like the sales to active ratio, which I've spoken about many times before, has a major impact. But then when you look at things, sometimes people don't consider it, but the percentage of original price. And this is really interesting because we look at it on a monthly basis. There have been several times where we've actually been receiving houses have been selling for more than the asking price on an average, which is quite shocking. But that's often led to a decline, not an increase in price. So when that starts to happen, the market peaks and then tends to roll over. So indications like that. Now, the big thing is, like I've said, I want to incorporate population into that and some other dynamics like district policy, where they're trying to get us to densify everywhere, which is going to put a lot more pressure on apartments and condos versus, put a lot more pressure on the regular single family homes, because there won't be as many of those being created. If the district is pushing for things like apartments and condos over townhouses, which is going to be pushed over houses, then I want to be able to calculate that in the numbers that I'm giving to show you. So in the long term, what I'm trying to create, and hopefully we'll have this done over the winter, is a heat map where you guys can go on to our website, and or the YouTube channel is going to be primarily where we're going to be posting a lot of stuff. And you'll be able to go on and see exactly what's happening in the housing market at a glance. So you'll be able to see what's the short-term window look like, what does the medium term look like, and what does the long term. So we'll be keeping in mind that real estate is a long-term adventure. It's a long-term investment. Typically you can't time it on the short term, but I want to try to give you the perspective of what's happening. So we'll be doing a weekly post, which is kind of what's happening in the market now in the short term, where we perceive the medium term to be headed, and what the heat map is showing us about where we could be headed in the long term. And I think when we encapsulate the data provided by the real estate board, we can encapsulate things like interest rate and population and a few other variables that we're going to be utilizing, we'll be able to create a heat map that'll give you some direction or some understanding of what's happening, and will allow you to make your decision of whether to buy or sell a lot easier to come by. So that, I'm just trying to look at this quickly to see if there's anything else. Oh, by the way, the apartment rolling average has rolled over, which again, we're too late. Prices have come down in condos quite a bit. Yeah, and there's no real guessing to what the Fed or the Bank of Canada is going to do, although like I said, there is a belief that they will be continuing to the downside or continuing to the upside in their interest rate adjustments, which is going to cause a little bit of pressure downward in prices. So that is really all that I wanted to show you. I mean, we can look at all of these sort of smaller ideas, what I'll be considering. But once we've got the heat map done, I will go through it with you and explain to you how I'm able to derive the heat map, and it'll be a gauge from cold, which means the market's falling, all the way to hot, which means prices are rising and activity is high. And so I'll be able to provide that to you probably the start of 2023. And I really thought it would take a lot less time, but as I dug deeper and deeper into it, in order to get an accurate reading, we are going to have to dig deep into where we can get some of the data points from that we're going to need to move forward. So be patient with me. In the meantime, we're pretty stagnant. There's not a lot of sales happening. Going into the winter, there won't. Oh, I did forget to mention one thing to you guys. I've said it before in one of the other videos that I did, and I think it's really, really important to remember this, that the buyer pool has been diminished. As a result of COVID, as I've said before, you have to look at your buyer pool in real estate as coming from a 5-year, 10-year window, because people that would buy properties could be any age, right? But there's usually a broad age range when people start buying a home. Some people it might be 22, some people it might be 25, some people it might be 30 when they buy their first home, or property for that matter. So COVID brought a whole bunch of buyers forward, which is going to mean that coming down the road for the next few years, we're going to have less sort of mass buyer demand. That is again going to cause a little bit of a downward pressure on prices, but just keep that in mind, that the longer term 5-year, 10-year buyer pool has been brought forward quite a bit. It doesn't mean there won't be any buyers, but there will be fewer buyers, and that's going to have an impact on our housing market as well. So that's all for this time. It's been a long one. I hope this has provided some insight into what we're working on to give you some insight into the housing market in Squamish. And hopefully it's given you a little bit better understanding about where we are at as well. All right, everybody, thanks very much. Take care. We'll talk to you soon.